I see huge opportunities in a digitized crypto blockchain related currency. And that's where I think it's going. And that's going to create some big winners and some big losers.
BlackRock and Fidelity are quietly laying the groundwork for the next crypto bull run. And there's a $14 trillion earthquake coming, with Fidelity, who manages about $4.5 trillion in assets under management, and BlackRock, who manages about $9.5 trillion in assets under management. And Larry Fink wrote in his annual letter to shareholders, very interesting developments are happening in the digital asset space. And because of this belief, BlackRock has been a very big investor in the crypto and blockchain space, being the second largest investor in blockchain when it comes to public companies. And obviously, their FTX investment didn't turn out that great.
BlackRock had an investment in FTX.
$24 million in a fund of funds.
$24 million.
Yeah, it was in a it was not in the core part of our business.
Okay, so what do you think happened there? And then I want to talk.
But they're still here, and so is Fidelity. Fidelity Crypto quietly went live, giving 37 million of their customers access to Bitcoin and Ethereum. And we also see that Fidelity Digital Assets is growing their team. And on their website, there are several crypto and digital asset job listings. And the funny thing about these companies is that they have been building their crypto products during a brutal crypto winter where nearly $2 trillion evaporated from this industry. Most people ran away, but BlackRock and Fidelity doubled down.
If you believe that the fundamentals of a long-term case are really strong, when everybody else is dipping, that's the time to double down and just dive extra hard into it. And that's usually the right move.
And if we look back at BlackRock, they partnered with Coinbase so that they could provide crypto to their clients. And this happened in August of 2022. This was a time where there was extreme fear in the crypto market. Everyone left, but the wealthiest and smartest people, they stayed. And this isn't new. BlackRock and Fidelity didn't just enter the crypto space recently. They have been here for a long time. On Fidelity's website, it says it loud and clear. In 2014, Fidelity began mining Bitcoin. This is mind-boggling. These companies have been here all along, through the ups and downs. And if you have been here over the last 6 to 12 months, I want to give you a round of applause because the last 6 to 12 months were very scary times, but some of the most important times to be in the crypto market. But even if you're just entering into the crypto space today and you're just finding out about this right now in this video, you can make the case you're still here at a good time because historically, 500 days before the Bitcoin halving and 500 days after the Bitcoin halving have been some of the most important times in Bitcoin history. And right now, we are 393 days away from the Bitcoin halving that will happen in April 2024, where the Bitcoin reward will go from 6.25 coins per block to 3.125 coins per block. So we're less than 500 days away. And if we look at history, in 2012, there was a run-up prior to the halving, and then after, there was an explosion. And then again, in 2016, 500 days before the halving, there was a run-up in the Bitcoin price, and then after the halving, there was an explosion in the price of Bitcoin. And then again, in 2020, a run-up 500 days before the halving, and then after the halving, 500 days after, an explosion in the price of Bitcoin. And here we are again. We are less than 500 days from the Bitcoin halving. And over the last few weeks, Bitcoin has been doing very well. So the narrative is playing out for now. But it's important to note that past performance is no guarantee of future results. Maybe this time around, we don't see this explosive growth. When it comes to crypto, it is a new asset class, and also there are no guarantees. It's all a probability. And for the sake of this video, even if Bitcoin does shoot up to 80K, 100K or more, it likely won't happen without any volatility. Let's look at Bitcoin's run up from about 6K to 68, 69K during the previous bull run. It wasn't straight up. At this point, January 9th, 2021, Bitcoin at 40,000, and then it dropped to about 30,000. Then again, Bitcoin rose to 57,000 and then dropped to about 46,000. And you can see this happened over and over again. And then from here, it dropped all the way down to about 30,000. At this point, everyone thought it was over, but then it shot up to 52,000, down to 41,000, and then again up to the $68,000, $69,000 range. Bitcoin's market cap is tiny, $549 billion. Even the market cap of the entire crypto industry at $1.2 trillion is very small. And when dealing with small assets, even if it's really good, it's going to be very volatile. Same thing goes for stocks. If we look at Amazon, one of the greatest performing stocks of all time, it was a very rocky road to the top. So you see, it's pretty hard to time markets, which is why I dollar cost average. And I want to show you something crazy. Even if you got into Bitcoin at the all-time high of $69,000, but you were dollar cost averaging, today, you'd be in the profit. Because crypto is so new and so volatile, it is very difficult to time the market. It's even difficult to time bottom ranges. But because I dollar cost average, naturally, I end up buying Bitcoin at the bottom. And I'm not sure if we did hit the bottom. Maybe 16 or 17,000 was the bottom range. But because I dollar cost average, I was buying at that time. And I put out a video a few months ago of Andrew Tate stating loud and clear that the time to buy Bitcoin was now, at that time, around the $16,000, $17,000 range. So did Andrew Tate really call the Bitcoin bottom? Go ahead and watch this video to find out.
Guaranteed. You must escape the work, consume, die cycle.